Teladoc Healthcare, a global leader in virtual healthcare, is showing promise as a business, but the stock is down. In this video, let's explore what Teladoc is, the facts behind the company, who is buying it now, and my perspective if this is the right time to buy the dip or just wait and watch. Hi, my name is Sunny, and I make videos that affect a common man financially. If you're new to this channel, please subscribe to it alongside smashing that like button, as that will help me with the YouTube algorithm, which will be highly appreciated. They are in the sunrise industry of telemedicine and virtual healthcare based out of the US, who use technology to make healthcare accessible to everybody and everywhere. Founded in 2002 and being listed on NYSE under the ticker symbol TDOC, became a $1 billion revenue generator as many mergers and acquisitions over the years enabled them to reach this scale. With a worldwide footprint alongside having about 40 million members in 2021, whereas experts are viewing them as industry disruptors, and you guessed it right, Kathy Wood picked it very early on. When the pandemic hit, there was an early rapid adoption of their technologies as everything was shut down. The business for them was booming, and so was their stock price, which hit over $300 early last year. Since then, it has steadily declined to around $75 range on the day of recording, thus eroding the shareholder wealth by over 70%. With today's market cap of $13 billion, it is a skeleton of its former self as far as market cap is concerned, but like all growth stocks, is still losing money. In 2021, they saw a decent growth in revenue, but not like the year before that, where they almost doubled it. They have got encouraging earnings where revenue along with patient visits are up. Experts are hopeful that with the rapid pace of technology adoption and being an industry innovator, they are on track to grab significantly more market share. There is no doubt pandemic did help them initially, but when things started to ease towards the second quarter of last year, people resumed their routines while medical offices started to reopen. Surprisingly, its business still continues to grow, but when you look at the stock price, it has been going down ever since. So there seems to be a disconnect between the financial as well as the market sentiment towards the company. Not everybody thinks Teladoc is down and out. Maybe that is the reason Kathy Wood has been buying it a lot in the last month or so, so possibly she is trying to buy the dip. So much so, it's now amongst the top 10 holdings in each of her four top ARK Invest ETFs. The company is targeting a compounded annual rate of growth of 25 to 30% for the next 3 to 4 years. They are hoping to touch $4 billion in revenue by 2024. Just as a side note, the total US addressable market is more than $250 billion. Therefore, comparatively, they are targeting just a minuscule market share. Now, considering all this, Teladoc stock looks like a bargain right now as it is trading close to its 52-week low. In my limited wisdom, it is based on the convergence of healthcare and the modern technologies available right now. If you ignore the noise about the stock while just looking at the numbers supported by their 80% revenue growth, you will see a completely different picture. There seems like a disconnect between the financial picture about the company and what the market is saying. Now, a little bit about the markets. They often tend to overshoot both while buying or selling, which gives an opportunity for an educated patient investor who can see through the noise. It being an industry disruptor often gets richer valuations, but during today's times when everybody is talking about increasing interest rates, it is bound to be hammered down. If you play a longer game with an eye on companies' fundamentals and growth prospects, while at the same time ignoring the noise and the fear psychosis, don't you think there is a compelling reason for the company to be bought at these prices? That does not mean that you call your broker tomorrow and buy all the stock with the money available in your account in one go. Definitely not. You could start buying at these prices as you keep your firepower on the side just in case it falls down further. which I know it might. Remember, money is made long term, especially during the times of fear and uncertainty. Definitely not in every stock, but there are certain cases where you need to take a call. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. This is my take on the topic. Teladoc, a buy or a sell? If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.